All right, let's jump into it. Where we at? A little bit later this morning. We're at 10 to 12 on the 5th of December. And look, as normally do, start off with DXY. Just came online a moment ago with a little small sort of gap down. Let me just zoom into a smaller time frame. Boom, we can see a little bit of a gap down. As I said, this is not really, I don't put a whole heap of sort of solace in this, but it does open at 11:45 on this one, so it gives you a little bit of an idea of a direction. Obviously, a little bit of a push up here. 12 o'clock is really where we're going to sort of call it. And 12:15 seems to be the time that we really see some volume sort of pumping into the markets and that recently. So, where we are, still about 25 minutes or so before we expect that sort of large bit of volume in. But what I want to sort of cover is the fact that we actually had some somewhat actually negative US data out last night. And yesterday I was saying that, I mean, everyone knows I'm sort of looking at this sort of as a large sort of like, head and shoulders, a little bit of a crooked neckline. I think I've got a sort of better, clearer drawn out on this side over here. And as you can see, we came back down into this area again, bang, and we tested it and pushed up into the close. As you can see, this one has this. What is this one? FX open or whatever doesn't show this sort of opening level. So just get down a little bit lower time frame here. So yeah. So as I was saying yesterday, you know what I mean. We've noticed, there's been a couple of bits of news or data, which has obviously shot DXY up, and market have just used these occasions to sell into it. Where these are like, I mean, they haven't been sort of like, super high tier, um, groundbreaking bits of data. Like it's not like, rate decisions. I think CPI was probably in there. Normally I'm sort of on the point. I can tell you where this candle was this bit of news, but I think late nights have sort of caught up with me a little bit the last week or two. Um, but I think that's a testament to what they're trying to do. And they try to sort of up, down, up, down. Oh, it's breaking down, flies back up, breaks down, flies back up. And this is what I've said about DXY. They will do this kind of stuff, and they'll burn you out mentally, they'll burn you out financially, and then maybe eventually we'll actually see the move. But the more sort of direct point that I'm trying to sort of make with this is that I was saying yesterday they've had good bits of data and the market's used it to sort of sell into. And I said, what happens when they get the bad data then? Because, you know what I mean, they've had good data and they sell into it. So they're obviously keen to sell it. What happens when they have bad data? And last night we had ISM out. We had Jolt. Was it Jolt? Sorry, no. ADP was out last night. ADP. It was revised down. I'll pop it on the screen here. Refresh this one. It was revised down from last month. Yeah, just here. So 184 down from 233. So that's a big revision. That's 50,000. And this is why I always say I sort of take the US data with a grain of salt because I mean it's fairly like big miss. It's about 25% or so, maybe just a little under that they sort of over reported. So anyway, revised down last month. Expected a little bit of a slowdown anyway, and came in just a touch under there. So pretty much in line, like only 6,000 out from the expectation. It wasn't really much, and didn't really sort of move the market a great deal. ISM is the one that actually sort of moved the market a little bit more because, as you can see, these are the ones where 50 is the baseline, and that further away is expansion. So they've been putting in some pretty decent numbers, and been expecting to hold that. Slight tick down in the services, final services, and then ISM PMIs here. This was a bit of a drop off. So this is a bit of negative, sort of, let's jump back on the chart, a little bit of negative US dollar data. And as you can see, the resulting action is bang, market sold it. So came back down, hit support where we've sort of seen it sort of bounce a couple of times and that. The bounce so far, obviously, as you can see, up here, sort of curling over. I think if we see a continuation of this, it should be enough to sort of get through here because, I mean, you got to think how many times can the market, 1, 2, 3, 4, kind of 5, because we touched into a little bounce, boom, touched in again, did rally sort of into the end of the session. But I would say if you can sort of roll this over, we've got almost a little bit, if you sort of carry this through here, it's almost a little bit, whoop, that'll just happen there. A little bit of a sort of range through here. As you can see, they've tried to sort of use this as resistance, support, resistance, resistance, support, resistance. So I think this is an important little area, and this is the way that ranges will tend to work as well, that you'll have that sort of little midway. You'll have that little midway point with it all, generally. So there'll be two parts to the range. I mean, there could be multiple, but generally you'll see in a larger range, there'll be a midway point. Obviously, the longer you spend in this lower half, the more susceptible you are to sort of coming out that side, and vice versa. But we can see quite strongly that the market has rejected quite significantly from this upper level here. So the data coming in yesterday just happened to come in that perfect time to line up with their sort of technical levels as well. As we're sort of seeing it open up this morning, a little bit of a push down. I think underneath 1067 here, so let's put a little alert on here. So breaking supports. I think that'll be an interesting level if we get down under here, because really, we're sort of starting to move back down. 105.70 is kind of your lower level there, and I think this is the open from this week, if I'm correct. Yeah, and this is the one that I've been saying. Like, I mean, on this, what's this 1 hour candle? Yes, there's the tiniest little sort of bottom wick there, but really on a daily, weekly, there was no bottom wick. As you can see here, this is where we opened the week, up over here, bang, moving down. So this does look like it's curling over. We break this level, come down here, retest this main sort of level through here as well, which we can see is obviously that support that they've been working off. So I think if you can get down, I mean, next level is to sort of take out these lows over here. I think that's going to be, well, that is your neckline. I think that's going to be quite significant for DXY. So I don't think it's going to go through straight away, as I've said a couple of times with this. I think, so if we get back on the lower time frame, if we do come back down here, put in that little bottom wick for the weekly, daily, close that little gap, I'd expect a little bit of a bounce off there, and maybe something like that as you sort of come through here. Price target. Yeah, so something to sort of this effect. Close the gap, bounce back up, retest underside of here. If you can go through here a second time, I think that's the time that we'll go, okay, wow, here we go, head and shoulders rolling over. That's the way it's going to go. So, yeah, a little bit of work to do. I mean, only just sort of opening up now, so we'll have to sort of see how things sort of come. You can see that this bounce, so far, the RSI buying pressure is not really sort of showing much of a sort of push back up. Look, top side, flip side, you've got to consider both sides of the coin. If we do happen to go sort of like, up above the bounce highs, well, it puts us back into this top half, and these are the levels that you're kind of looking for, up to over here. So onto there. Bear with me one sec. Yes, so we'll sort of see how things open up. As I said, 12:15 seems to be a bit of the time that we start to get a little bit of the volume in. But I think for the moment, it's looking like it's wanting to sort of target this area over here, this support area from last night, and then see if it can break through there. We've got the alert set. That's our little price target that we're sort of going for down under here, which is closing that gap, bounce back up, and then move back down over there. All right, so let's flip it across. We got Aussie. Oh, the poor Aussie, mate. It got absolutely walloped yesterday. GDP came in weak, just overall weak, but even on top of that, weaker than expected. And yeah, Aussie really paid the price for it. So I've just got things opening up on the new hour here. Back 2 seconds. All right, and back there. So yeah, pretty bad on the news front, data front for Aussie yesterday. So GDP, as we can see here, these are very low numbers. Um, I think sort of year on year also, for some reason this doesn't, only comes out with half the data. I'm not a big fan of this Forex factor in that, but year on year was a bit of a slowdown. Quarter on quarter, as you can see here, slight tick up, lower than expectations, as if sort of like, you know, Aussie was sort of like holding on by just this idea. And this is the thing, like Aussie has been held up, and I've said this a couple of times, like obviously being smacked down, all in all, it's getting hammered, yes. Um, but it's only sort of been holding up, holding up, holding up on the idea that, we have sort of more of a hawkish central bank. Sorry, I had a bit of a late night. Bit of a more of a hawkish central bank than the peers. But when you start to see incredibly slow, weak sort of data sort of coming out, the thought is that okay, well, if the economy's slowing so badly, maybe they have to sort of cut the rates because it's a bit hard because we actually also just had some more data out a few moments ago, which contradicts a lot of this. That they were sort of saying that, like, if you flick on the TV, everyone's, it's so cost of living, it's so hard, and stories of people having to, you know, I referenced this a few times because I was like, it's just so absurd that they couldn't afford to turn their light switches on, so they're using candles, and I'm like, come on. Maybe there's somebody out there doing this, like in a farm or something, but I very highly doubt that if you've got an apartment, you're not turning your lights on and you're using candles. Anyway, point being is that it sounds like it's horrible. It sounds like nobody's got any money. And then if you sort of add on top of that, um, sort of actual slow growth like GDP, well, it's kind of like, well, where are we winning? Like, you know what I mean? If the whole goal is only purely to fight inflation, that's not even coming. Well, it's coming down, but it's not at the target yet. And the market goes, well, maybe the RBA is going to have to do something because we need to stimulate the economy to move on. Fighting inflation's great, but if you go into recession, and that's the thing, remember, it's always about that balancing act with recession. If you go into recession, well, people are definitely not going to have any money anyway. So anyway, I believe this is the reason that it was such a drastic response because GDP figures aren't typically a massive market mover. It's just another piece of the puzzle that you put into place. But Aussie got absolutely walloped, 1.2% down. Like that is a big hit. And obviously then, retest and then bang came back down a lower for a second, even and dipped down even lower. Um, so you know what I mean? Like it certainly was a drastic sort of reaction. But then if we look at the data that we had just out a few moments ago, actually I'll put it onto this one here because um, this is what we're looking at now. So Australian household spending, negative 0.1, expect a little bit of a tip up, 0.8%. 1.3, that was a sort of month on month. Household spending, 1.3, estimated tick up to 2.2, 2.8. So where are all these people that are lighting their candles instead of turning their light switches on? Look, don't get me wrong, I'm sure there are people out there that are definitely doing it tough, but it kind of contradicts this whole sort of thing that you sort of say, and this is not, well, maybe it is putting the tinfoil hat on with it all. Um, with the news when sort of people say that everyone's doing it so tough and that you know what I mean, nobody's got any money to live. Like you want to go out to dinner, well, you got to book a week plus in advance. I don't recall it ever being this high in demand, and these are expensive places to go to eat. So I don't know. It's a little bit sort of iffy with that kind of stuff, but. More to the point, GDP yesterday, Aussie got smacked. Came back down. Okay, trying to rally off this little bit of data that we had out just before. I think we also had our exports data. Just one sec, which was a bit of a beat as well. So we got revised down. Which is that revised down? So a small revision down. Expected to come in pretty much flat. So it seems like they're a month behind with their expectations here. And actually sort of came in a little bit stronger there, about 10% stronger. So that's positive for Aussie. But again, these bits of data, two things. These bits of data aren't the market moving ones of CPIs and rate decisions and these kind of things, but they are sort of pieces of the puzzle we put in. So you can see the reaction was basically just to stop the flow, stop the bleeding a little bit here. If we chuck on to a lower time frame, we can see that sort of like it did have a little bit of a sort of smackdown earlier. That data came out, boom, and one more test back down over here. So look, it's not really, as I said, something that's sort of shifting the market to make it sort of go, wow, we're going right all the way back up. But it stopped the flow, and it contradicts a lot of this sort of idea that everybody's doing it so incredibly tough because the household spending is there. And remember, this is a month behind, so this isn't reflected in what we've just had with sort of Black Friday sales, which I said something to a mate the other day about the Black Friday sales and some ridiculous amount. Oh, here we go, actually. Here we go. 1 second. It's a little cutter. It's on there. Black Friday sales, Cyber Mondays, Australia, retail sales to surge by 70 billion. Not just that we spent 70 billion, it's that it's surged. Record-breaking shopping season, potentially boosted by Christmas sales. Like, this is the thing. All these people that are sort of like, I feel bad for the people that are just putting their candles on, but it just doesn't seem to be the status quo. And I think that's why you got to sort of really sort of, take a lot of this sort of stuff with a grain of salt because that data is actually showing things that life isn't actually so bad for the majority of people anyway. So look, that sort of stemmed the flow with Aussie here. Really, as we know, Aussie's at the mercy of the DXY, at the sort of the US dollar buying across the board. So yesterday was just an extreme hit, and I think this is also a little bit. So there's a couple of factors with Aussie here. One, like we've been holding this range, put you on a higher time frame here, been holding this range for a bit here. Boom, boom, boom. As this broke, it really picked up steam and really just stopped City coming down under here. That at the same time with DXY moving up, that's what really sort of gave Aussie that sort of kick in the head. And obviously back down. I think we tested 74 when we get down to in the end. 74, 64. So old dyslexia kicking in. Yeah, 64, which we've got marked out for some particular reason. Why have we got this one marked out? Okay, just for these wicks down over here previously. Obviously, we pierced through it a couple of times, but you got the big round number. Market gave it a little bit of a bounce. Would have liked a little bit of a higher close. But, it's off the lows at the moment. Another attempt coming down here. It's actually first attempt down, second attempt down. Boom. So if we actually put this onto a lower time frame here, now this is a bit wonky, but it kind of looks almost like it could sort of work out. Let's go here. Not a perfect one, but we do have the setup here with a fairly defined neckline where it sort of held 2 attempts yesterday. So this bounced back up here. This came in perfectly, lower time frame actually, so that you could see there was a nice little area through here, but it was the bottom of these wicks as well, so a few factors there. So long story short is that potentially we have a little bit of a inverted head and shoulders. If we see US dollar, DXY, and that sort of sell off a little bit today, we've got a little bit of Aussie data on the positive foot. This could pop back up. I think if we sort of get above sort of 64.40, you're going to see a lot of sort of people that are sort of like shorting it down here, shorting it down here. They've had another go here. Well, where are you going to put your stops? You're going to put your stops around these areas over here. So if this can continue up, I reckon we could get back up into the sort of like 64.70s or so, 64.80s. I think there's a lot of work to be done to sort of get up to the top side over here. But of course, remember, if DXY sells off, that's the US dollar pretty much selling off across the board. Aussie's also going to be catching part of this. Look at Aussie on, on a little setup like this. And I've covered this a few times with Aussie that, sorry, just 2 seconds. Just seeing if this matches up with anything. No, not really. I've covered this a few times with Aussie. Aussie loves to do these little breakdowns and traps. We've seen it a lot of times on higher time frame moves. Of course, I haven't got them on any of these charts now, have I? Maybe more on weeklies, I think it was, actually, that we used to sort of see these kind of moves here, where you've got like a pretty defined sort of little support through here. Trap fires back up this area through here as well. Support, 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 support. Trap fires back up through here. Support, support, support. Trap fires back up. So look, it's not unlike Aussie to do something like this. Of course, look, it's got a lot of work to do, and it's not about to do it, in 5 minutes. And this is a weekly time frame, and we're talking about a 4-hour time frame. But it's not uncommon for Aussie to do this kind of sort of stuff. Well-defined support, breaks it, wipes out the stops down here, drags in some more shorts, and then can squeeze those ones and push them back up here. So work to be done, but I'd say above that little bounce wick high, so above sort of 64.50, and I think we could start to see a bit of a squeeze moving back up and really sort of trap these guys and really make these guys hurt. Even if it is, excuse me, going to come down and do those 63 levels, I think there's some pain. The pain trade has now been flipped around and more can be inflicted up this side over here. Because remember, there was a lot of people sort of trying to catch this area here long. Well, bang, they've all just been taken out here. And then if they tried to sort of be a little bit tricky and put the stop underneath the first dip, well, bang, they took them out. So I think the pain trade has shifted to the other side. But of course, we want to get above 64.50 to sort of see that really sort of come into a squeeze. You've still got this falling resistance as well that we're very close to here. So it'd be interesting. If we actually put it on the daily for 1 second, we're still technically, actually probably more so now, in a negative divergence through this area here. So I think, look, this has potentially still got a chance. I'm not saying it's going to do it. I'm just saying it's potentially got a chance. All right. Anyway, so that's the biggest sort of picture with Aussie there. Let's get into it. Pretty much as showed. Look, you break through this little support that we just put in with that news. Then bang, we come back down, we test the lows, maybe a deeper sort of pull back through here. Up above 44 to say, call it 50, past those wicks, then you'd expect a bit of a squeeze and a push back up to these levels. And we start to look at maybe a couple of these areas that we sort of saw as supports through yesterday and also through the last couple of days sort of moving up over there. But yeah, it's if a bad situation, it's looking at least slightly constructive. This is all negated underneath 64.20. All right, so copper. Copper did exactly what we sort of said yesterday. Well, hasn't done exactly. We hit our price target up over this zone over here. That's fine. Came back down. I said, look, if we can sort of consolidate in this box, it's looking more constructive for another leg, and that's exactly what it's done. It's sort of come back here and just bounced up and down like a ping pong. So it's positive for the time being. We're still in this major sort of higher kind of sort of range, but we're sitting in the top end of it. And as I mentioned before, sitting in the top end of it, you're more prone to be breaking out that direction. Pretty clear cut, you break this box, you're back down to the lows over here. If you do go through here a second time, I think this could be something that could carry on and move back up, and we could be looking about 430s. Obviously, we still got to deal with this sort of 426, 427 level, but certainly above 427, 430 is a plausible area to be looking for, which of course is the previous supports of that really tight sort of range that we had for a couple of weeks back just prior to the election. So at the moment, looking again a little bit more constructive. It's part of the what we call the secret sauce for the Aussie. You need equities, that's tick. You need copper. Yeah, I mean, I'm still reluctant to sort of say it's a tick, but slightly up, I suppose. Um, and then we need sort of US dollar selling off. So that's on the cusp. So things are kind of lining up like they could want to go. But, everything's better with a bit of confirmation, of course. So we'll have to sort of see how they're sort of panning out. But a lot of these things I think will come at the same time. I think if we get that breakdown with DXY, we'll see copper move at the same time. We'll see Aussie recover. Metals, I'll get onto in a second, gold and silver and that. Actually, silver's looking very good at the moment. So, this is why I chart all these things together at the same time, because we sort of see, a lot of these things, which are called cross-chart confluence, will kind of sort of move together with each other. So, as for now, look, it's just chilling in its little box. I think above this 4218, whatever, I think that is when we'll sort of start to see at least minimum take out this wick from that bounce back into that price target area again. And then once you can sort of cruise through that 430, which will be pretty much the sort of start of this drop down of this last massive leg coming down here after post sort of election trade. Okay, so flip across with silver. As I said, looking very constructive here, right off that 61%. Actually, how do I? That wasn't the 61, was it? So I trade these things on a few charts. Where were we? It was on the lower time frame through here. This is the chart it was through here, I'm pretty sure. Bang. Let's move through here. That's one. I think that was it there. Boom. So I'll cover this one on X as it was happening. So that was a nice little rocket. Perfect off this rising support. Smack bang on the 61% retracement. Of course, this is at the time with these highs sort of over here. Wherever you want to put them, like here, whatever, of this leg through here. The reason I sort of say that is because if you look at this first leg here as well, this also was very similar, very close to the 61% there as well. So these deep pullbacks are coming, but they're still making new fresh highs. And we really came up into the top end of this range over here, which is so where we were calling, I think 3150 or something was where I was calling. But you can see obviously where the sellers have been predominantly in this sort of 38 level, 40 level. Couple of tests to go through last night. Didn't expect it to go through first time. Never do. A little bit of a pullback. I thought maybe we might have got a little bit of a deeper pullback. If this runs through early, if this goes through now, which it looks like it's struggling a little bit, I think that, we're going to see quite a big move because, you're then looking at this as your actual leg from these lows to this high. And this is only at the 23% fib. So if the buyers are obviously driving it up here and they're not even bleeding it past this sort of 23 fib, and they push it on again, I think that could be quite a big break through here. So certainly interesting times. Above these wicks over here, above sort of 3150s, 3160, I think that's going to be a nice little push up to the top side there. The reason that this is important at the moment as well is obviously, short term, this is what it's about. But if we have a look, remember on the weekly time frame, this is the big level. Again, 61%. It shows up time and time again with these pullbacks. This is almost, if you look at this and that chart that I just showed a second ago, this is almost identical with this. I think the last one went a little bit past 61% on the first pullback. 61% made a new high. 61%, can it make a new high here? It's certainly looking constructive. It needs to break out of this little zone here. And then your first target is the body fills over here at 33. Actually, the measured move of this on a smaller time frame, I should say, is I think around 33. So around here, which obviously comes in where we've seen a little bit of selling previously. But if you're getting up around there, body fills also a fairly decent little target, gives you another sort of 60 points or so in it for the top side. If we do get a push over here, and hold this into the end of the week, you'll start to see this RSI turn up and things will start to line up. And that's the thing, as I said, generally, while these things break, most of the time, you do get a couple of ones where they sort of, they'll run off on their own, but most of the time you'll see a few of these things all break at the same time. If we see silver popping out, that could be an early indicator for what's about to happen with copper, could be an early indicator of what's about to happen with Aussie then. We have a look for PBOC sort of movements and that with the yuan for sort of a bit of indication there, bit of DXY sell off. So all these things will start to sort of click at the same time if they do happen to play out. So back onto lower time frames and with silver coming through here. Yeah, look, I think sort of it is looking constructive. I just still have very low expectations of faith with silver. I mean, we've hit the target, the first target. We know that where we're sort of looking for. Um, if they drive it through, I think it'll move quite quickly. Though I'm still in the belief that maybe they sort of suck a few people into it, drag it back down, and then move down here. I think it's, yeah, we keep an eye on a few of these bits and pieces like DXY and that to sort of see if we can pick up any little clues. But at the moment, yeah, 23% pullback is bullish. You just need that big rocket candle up here to confirm the next move. Go after the stops that may be sort of sitting around these areas. But yeah, it's looking very constructive. Flip across, we've got gold, and gold has been a headache. Finally broken a falling resistance. So I suppose actually it's done it a few times, hasn't it? Like if we sort of drag them down here or drag it down here. But really, the box is the big one that we need to get out of. We need to get rid of those things. Like I traded this last week, and I was that was on the Friday. I was like, oh look, 60's the line. We need to hold it. I think I was stopped out at 54 or something, which actually proved to be pretty good because obviously it got massacred on Monday. But this has just been an absolute headache to trade. I've got a mate that is sort of starting to trade a little bit more gold, and he's like, "How do you do this every day?" Like it, but in all fairness, gold isn't like this typically. I mean, look at those kind of flowing runs. Yeah, I mean, gold does like to sort of consolidate and do this kind of stuff. But I used to sort of say, and I haven't said it for a while, that gold is good for about $5 through Asia. That hasn't been the case recently. We've been having some big Asia sessions, $20 swings. So, yes, looking a little bit better here. But same sort of thing. We need to see that next actual continuation because while we're up in this area, you're still at the mercy of what's happened every other time. You may have broken through this little sort of falling resistance here. That's fine, but you're just chopping up and down. I mean, what's it been? 56 to 46, $10 and getting even tighter little range over here now. So really, you want to see above 26.67, and then that'll see it start to move up. But again, as soon as you get up there now, drag this down here a little bit further, this now becomes this. You know what I mean? The target moves down on a sliding scale with it. Maybe this will be the one where we actually get the confluence here. Maybe that's the trade. Depends how fast it comes, of course, but if you get this by Friday, probably not going to happen in that just prior to NFP, but it could happen. We'll see how we go. But I think that's the break up here and then into this falling resistance, which could come confluence around this time here. If it does come afterwards, like this is all under the assumption that it does come, and it breaks through like this, that horizontal will still come into effect, and maybe that'll give you a little bit of a retest, a little bit of a sort of resistance back down here, retest, and give you a breakout line to move up through that area there. But certainly, look, it's ticking along. I think there's still just a little bit of work that needs to be done, of course. Short and here and now, look, there's a little bit of a zone through this area here. I think sort of if it can hold above 46, you're looking okay. Under 46, You're looking back down to, let's move over here. This was actually the move yesterday that I did point out as well. Like gold loves to do these kind of range, stops out everybody, like say even just under all these wicks here. Textbook stops out, takes out the lows there, and then fires back up. So it's a very sort of typical thing of gold to do. A little bit of a triangle through here. That's your little measured move just of this play here. Maybe it takes out all the tops over here and then reverses back into the box. We'll have to sort of see what they do. Uh, it's holding okay for now. I think it's just too much of a headache to really sort of hold anything through these areas. So it's worth watching, but I think sort of yeah, even once you break these highs, you've got all these highs over here, top of the box. It's a tough trade at the moment. And finally, just finish off with the yuan. So big move yesterday. So we were coming into this big resistance, high time frame resistance area, and the PBOC smashed their fixing. So the fixing they put in down at 712. This is where it was expected to be. This is where they put it. So they've got a 2% band on the day. So let me take this over here. Let's get rid of that one. 2% band on the day. So 2% massive move for most currencies, but very big move for one, particularly in one session. This thing can sit in a 1% range for 3 months. But the point is, by putting the fixing lower, it caps any sort of potential topside from that 2%. So it's not 2% from this zone here, it's 2% from where the fixing is. And that really spooked the market, and they just sold straight into that yesterday. There was excuse me, a very fast move at first. This sort of move come back down here. And I actually put on X at the time and said, was that their intervention? And I guess in a way, it probably was. They're sort of intervening by putting the fixing lower. Not intervention necessarily like them flooding the market with US dollars. I don't know about that. But point is, the reaction is still the same. Got sold into, they tried to hold it, sold into, and all in all, a pretty sort of bearish kind of day for them there. So I haven't actually sort of seen where the fixing is for today. It probably should be just coming out around this time as well. See if they're sort of keeping the foot on the gas with a sort of a bit more of a sort of move to the downside over here. So yeah, certainly took the wind out of the sails there and came in just in time. Well, second attempt. Obviously, first attempt in here got sold into. Second, third attempt is when that sort of news came out and they bang, so the fixing came out and they pushed it back down over here. So still in bullish territory if they could rally and push back up here. But I think people will be cautious because you don't want to go against the central bank. It's fine going against other traders and other sort of areas, but going against central banks, you will not win. They have unlimited amounts of capital. So if they want to smash things and protect their currency a little bit, they'll do it. Likewise, if they want to let the yuan just run loose and get super weak, which I've sort of seen that they've been talking about as a sort of potential way to combat the tariffs, that's also another possibility. So we'll have to sort of wait and see what they do. But at the moment, back testing top side of this resistance area, break back below here, then we got a little bit of a fake breakout, and we could be down, looking back down over here. Like we had this little smaller range, fake breakout, bang, up to the top side. I think if we sort of get them back down into this area over here, then we could be seeing a bit more of a cooling. And this is what I'm sort of saying. A lot of these things will happen at the same time. If we see DXY sort of roll over a bit, if we see Aussie appreciate, if we see sort of metals break out, if we see copper move up, all these things will happen at the same time with that cross chart confluence. So we'll see there. All right, I think that's pretty much it for the charts. And quick look at the news. All right, look, nothing sort of screaming at me through here. Normal sort of unemployment claims, pretty flat, boring looking stuff. in the morning, and of course tomorrow, first Friday of the month. NFP 218 is the expectation. Disregard that 12,000. It's obviously a massive outlier. And yeah, we'll sort of see how we go. All right, that's it for me.